The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time, about 24 minutes to go until the start of trading. And we have calmness right now with the S&Ps just 2 points higher. Yesterday, you talk about volatility to the umpteenth degree. This morning, we picked things up basically flat with S&Ps up by 2, trading at 6,025. Now, the S&Ps, all the markets, pretty flat so far this morning. We get Google earnings after the bell today. We got non-farm payrolls coming up on Friday. You get some of the Treasury talking about their maturities, the lending schedule that they're going to go out in terms of raising, how much they're going to be raising in terms of selling bonds off. That's coming tomorrow. But check out the action. Even from where we were last night, S&P's traded down 80 points from where you were at 6 o'clock to where we were at midnight. And just like that, we're basically flat. So what do? You close it out. We trade higher. We trade lower by 80 points, and just like that, we're back to flat. We got volatility everywhere in this market is the point. These markets, how about just fill in the gap, right? You did it in the S&Ps, and you did it in the NASDAQ 100, right almost to the tick. So pay attention to that one as well. Going to be interesting to see if we can hold this price level today. Seems like the case is going to be we're dealing with a rolling 30-day reprieve on tariffs for now. Negotiations in play, but nonetheless, S&Ps, we basically just touched that price level, right? Friday, we closed it out at about 6,060, almost exactly to where we got to when futures opened last night. And from there, we've traded a bit lower. But yeah, you're talking about a move of 2% from the lows in the S&Ps. We fill the gap, and just like that, we're a little bit lower. NASDAQ 100 did the same exact thing, almost to the tick. I say it all the time, folks. Sometimes patience is always key, always, okay? But sometimes, if you really have patience, there are some trades that you just do not have to give yourself a lot of room for a stop loss. And if you're wrong, you're wrong. It's okay. And when you give yourself a really tight stop loss, you can afford to be wrong many, many times for that one time you're right? Like yesterday, okay? In terms of if you're looking for that action, you say, you know what, this is a nice area, right? You know, I wasn't going to sell it short when the market already gapped lower. But guess what? We got back to where we were on Friday. Yeah. And you give yourself no room. And it did in the NASDAQ 100. It did in the S&Ps as well. Dow, a little bit of a different story. Got a little bit higher. We're slightly off of that level right now. Russell, almost the same as well, right? How about it? All the indices right back to where you were on Friday. We'll see if that area is going to be an area of resistance to the upside in these markets. Bitcoin, we touch 100,000. We're just under there at 99,525 right now. Crude trading lower. Put out in the newsletter this morning. Crude looks like it's going back to the lows, man. You know, this is a critical area. Crude trading in about a $5 trading range. Those trading ranges on the 250 mark in between, as in 72.50, 77.50, 82.50, 67.50. You can see these areas we've broken decisively. Looks like we're heading back to the 67.50 area in crude. Short-term basis, it's not stopping. Look at that run we had yesterday, right? From 74.50 to 72.50. We're now below $71 in crude. Gold, particularly volatile. Making another run this morning. How about it? Gold, 28.72. This morning, we're up another $6. Check out the daily. So just like we talk about potentially resistance in the S&P, gold, 2,800. We'll see if that's going to be an area of support. We're trading at 28.63, near all-time highs just made yesterday in that gold contract. Now, what's helping gold this morning? You better believe that dollar weakness is helping gold. Now, it's remarkable that you make all-time highs when gold's jumping, when the dollar's jumping, and you make all-time highs when gold's pulling back. This morning, we have a little bit of dollar weakness, and that's helping out the gold contract, dollar contract. Dollar index, I should say, down 643 ticks right now. We're at 108.34, and 110 looks to be an area of resistance. Okay, you put this thing on a weekly, And you can see we make that acceleration back there in January. We touched just over 110. And boy, on a technical basis, right? Not exactly indicative of strength at the 110 mark. We'll see where we go from there. But nonetheless, dollar backing off a bit. And that's especially interesting when you look at the fact that yields are actually on the rise. We got the 10-year at 4.58. You put that on a daily. Back it up. Yeah. You can see a little bit of a reprieve, right? We were chopping around at a 109 handle. We're at 108.24 right now. We got a little bit of lower price and higher yield with the 10-year at 4.58. So you get the 10-year approaching 4.6%. You get the dollar pulling back to 108. And yeah, tariffs are in focus. As the Journal puts it in an opinion piece, and so this is interesting, right? Trump blinks on North American tariff. Minor concessions is how they're writing opinion pieces in the Journal. Okay? What I find most interesting, okay, is when Trump put this out, I think it was day one, right? He was sitting in the Oval Office signing all the executive orders, 7 p.m. Eastern time, something like that, right? And he starts talking about the tariffs. And he says something like 25% tariffs coming on Mexico and Canada, and they're coming February 1st. And at the time, everybody's analyzing everything, of course, okay? And I remember thinking at the time, geez, if they were so sure they were coming, why weren't they included in the day one, right? If that was it, they were coming. So when he put that out there, he said, that's probably a negotiation. And it was. And so what's interesting is he did it again, right? So then that date was looming. He put it on. I said on the program yesterday that he could have come on at 11 o'clock last night. I just had the AM and the PM wrong. He came on at 11 o'clock AM. He sets up the tariffs, and then he saves the market from the tariffs. And it's going to be a rolling basis. But what to consider here is that it is a constant negotiation, and 25% looks to be the threat. And even the Journal saying minor concessions got them reprieve for 30 days. So what's it going to be? We're going to go through this again in 30 days. And he's going to look for more. And you're going to see a little volatility. And it's tough to imagine that the market, at least in the short term, all right, you go out 3 months, you go out 6 months, you get a real better indication of what's going forward for policy. But right now, do we really know? The market does not like unknowns. Okay, and we're going to be in an extreme period of volatility. And that doesn't mean it's going to be a meltdown. It doesn't mean it's going to be every day. Okay? But having that looming out there, and it's going to be constant, because all that did was push back the same exact thing for another 30 days, which is great right now. But how are you feeling about the market plowing higher with that deadline looming and then it looming again? Why would you extend it further when you could just do this every 30 days? That's what Trump has to be thinking, right? I could do this every 30 days. I'm going to demand something new every single 30 days. I'll give them a 30-day reprieve. I'll put them on Saturday, and they'll have till Sunday night when the market opens to fix that. As a trader, that's a pretty exciting proposition in terms of what is coming down the line. So we look over the VIX. Speaking of volatility, we got a 17 handle. Just like that, man. Yeah. 1801 right now. We were just at 17 when I clicked over to it. Back from 2042, still very little volatility priced into this market with the potentials looming out there. All right, folks, S&P's up by 1 right now. NASDAQ up by 27. We got some equities moving on earnings. 25% of the market capitalization in the S&P reporting this week. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. S&P's flat right now, 6,022. As I said, you're flat, but that includes a move of 80 points. That's a move of 1.3% to the downside over that time, right? You pop higher, you trade lower, we get back to flat, and we got an opening bell in 11 minutes. NASDAQ 100, you're up by 24 right now. We get some movers in the NASDAQ 100. You got Google earnings after the bell today. Google up to 204.35 from 202. Amazon, some volatility yesterday. We're higher by about $1 right now to 238 from 226 on that spike lower yesterday on Amazon. And yeah, you can see how, China, going to be interesting to see what happens in China. So Mexico and Canada get a reprieve. China's a different story. China, they hit back with a consensus seems to be muted replies, which opens the door for negotiations. Measured targeting as a warning shot, but it leaves the door open for some negotiations. We'll see if that happens. 15% on less than $5 billion of U.S. energy imports and a moderate 10% fee on American oil and agriculture. They're going to investigate Google, but guess what? Google, their search service hasn't been available since 2010, so not a huge deal. If you're a Calvin Klein owner or PVH, then yeah, not the best morning for you, as blacklist of entities that could affect their sizable operations in China, and they impose export controls on some critical metals, tungsten and others that are used in electronics. So China, they're on a different story. We'll see how those negotiations go, but this is going to be a rolling story, and I think it's going to be a headwind for equities, and it's really going to just provide some real volatility on a constant basis. We're going to get a headline-driven market, and it's going to be your job as a trader to decide the validity of the headlines and when they're coming, because yesterday if you had figured out that the reason why the tariffs were pushed off to Tuesday is to allow the chance that they were going to be rescinded by the end of the trading day on Monday, for what it's worth, right? All right, what else we got in this market? Boy, how about Palantir, right? That equity. Poof. PLTR. It don't stop, man. From 82 to 103. So they had a $10 move priced in either direction, and you're going to move 20. So if you were a buyer volatility in the right direction last night, you're going to get paid, at least on the open. And you're talking about 103 from $5 a couple years ago. You talk about it, man. $235 billion company now. Remarkable. Okay, it's Super Bowl weekend coming up. I found this one interesting. First of all, as somebody that doesn't have paid cable right now, I'm excited. Now, I think I was going to be able to find the Super Bowl somehow, but I don't have paid cable. And the fact that it's on Fox, that's the one service right now that I don't really have access to when football games are on. I have Peacock, so I get NBC games on there. I have Paramount, so I'll get CBS games on there. I have Amazon, so I get Thursday night games. Pretty remarkable when you think about how segmented. But I don't get Fox, so I don't get that Fox slate of games. I don't get Tom Brady announcing. Not really a fan of Tom Brady announcing games as a sidebar. Big fan of Tom Brady. But, man, not really a fan of how he's announcing those games. But, hey, anyway. But, yeah, you're going to be able to view it for free. Now, interesting. I'm reading this morning. Okay, I'm up early, just after 6 in the morning. I'm reading this, and I'm excited because myself, I'm like, oh, this is great. Super Bowl is going to stream on its free service, Tubi. Tubi? How do you pronounce that? You're going to watch ads? Guess what? That doesn't matter. The streamer could get a big boost from the game. I think that's an understatement, folks. I'm not the only one that's not privy to the Fox stream, okay, in terms of cord cutters. Fox has, look at how this article sets up. It's remarkable. They're doing this because guess why? Next, we won't bury the lead. Fox reveals plans to launch subscription streaming service this year. That one's at 9:08. So I read this article. I'm saying, man, that's remarkable, right? Fox, they've held off. Now they're pushing it out. I'm sure they're getting ready, and they were getting ready, all right. It was within 3 hours they were getting ready. So you'll be able to watch the Super Bowl on this app. I've seen this app on Roku. They acquired it for $440 million in 2020. You've had the other companies ramp things up. Fox says not. Okay, unlike Netflix, Warner Brothers, right? Disney. This is not a paid service. It's completely free. They offer a guide of channels, like TV guides. It's all ad-driven. And we've talked about it on this show many times, right? That's where the future is, man. That's when Netflix isn't even going to tell you how many subscribers they have going forward, because guess why? They're going to grow their advertising revenue. That's what they're going to focus on, not the amount of people, which is a dramatic shift. So, yeah, I think there's a huge opportunity here for them. I mean, they got big numbers. Look at this. So they announced that. You want to watch the Super Bowl, you don't have Fox, check out Tubby, got to figure out that one. And then, yeah, Fox, they announced they're going to have their own streaming service. They're getting into the direct-to-consumer streaming game. It's not meant to upend their place, of course. Yeah, and they've been on the sidelines with the exception of their free ad-supported service. So get ready for the tie-in. What a time to kick it off with the Super Bowl, for sure. All right. Yeah, and we talk about China. We talk about the tariffs. Yeah. Coal, liquefied natural gas, 15%, 10% tariff, crude oil, agriculture. You want to talk about the products? Look at coal, oil. Look at they got the real deal here. Cedars, grain milling machines. Nonetheless, the market gets a reprieve yesterday, but be careful when you talk about a 30-day reprieve because it's coming back. PayPal. So decent number from PayPal. They were trading lower this morning last I checked on them. Yeah, you're down about $6. So Look at that move, man. A little bit of a pop. Must have said something maybe on that conference call. Conference call began at 8 o'clock. Not necessarily, but you did just pop, $2 in the last 10 minutes or so, up to 84. Card processing growth slows amid focus, though, on profit. I read that headline. I said, okay, maybe the market's going to like that they're coming to profit. No, they're not. The volume of payments it processed slipped to 2% from 29% a year earlier, right? Growth in total payment volume for PayPal's unbranded payment processing business, and that's processing for others, slipped to 2%, a deceleration, intentional effort to price its technology more competitively, okay? So growth not happening right now. Why? Because they're ramping up prices. Well, net income slipped 1.9% to $1.2 billion. Okay, they beat expectations, but the market a little worried. That's a tough chart on a longer term basis. We'll check it out. We're PayPal. We're coming back for the open, folks. Don't go away.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, and we got the S&P slightly in the red, off by 1 point at 6,020. And yeah, it's going to be an interesting day, especially at these levels, so close to filling that gap. Do you actually trade higher when you know that that's looming? 30 days goes pretty quickly, folks. We have a lot of volatility potentially. We got non-farm payrolls on Friday, the 7th. And yeah, we go from there, but markets give it up a bit. S&P's off by 2, NASDAQ 100 positive by 12. Jump over to PayPal, down 8.3%. Yeah, I was talking about longer term, right? Check out that run up. 3 years doesn't even, time is amazing, right, folks? Tommy just turned 4 years old on Sunday. 4 years old. Remember when he was born? He's 4. And what's remarkable is, of course, we were expecting him from almost a year, so I'm going back to almost 5 years ago now, right, where I knew I was going to be a dad. That's when COVID kicked in. 5 years ago, right around now, is when the first stories were beginning to break. I'll never forget it in terms of the date because it was right around my birthday. My birthday is March 20th, and I believe schools in Florida started shutting down March 17th, March 10th, somewhere around there, so almost 5 years ago. And I say that only in that you go to pull back on a 3-year weekly, and you're not even close to the COVID pullback. You're not even close to the acceleration we got. It doesn't encapsulate the unrealistic highs that you once had during 2021, right? When you got that acceleration off of stimulus, market exuberance, all the above. But nonetheless, PayPal shares trading right at the COVID lows. Isn't that remarkable? That's what I wanted to get to, that long explanation. But yeah, we're sitting right at the COVID lows of PayPal, which is a remarkable statement. Nonetheless, they're off by 8.2%. They're not growing right now, but they're taking it on the chin right now to reset their pricing in the interest of profit going forward. And maybe that's the best thing for that company because it wasn't working out as was in terms of taking a longer term look at that chart, right? You're at $81, and boy, at the end of 2017, we were pushing $73, so quite a repricing. Check in on Palantir with their numbers. To the moon, up by 23%. As I said, approaching a $250 billion company. NASDAQ 100 positive by 40. We jump around. Amazon shares up by 0.6%. Yeah, I really think, and listen, I own Amazon. I love Amazon. It's nice being diversified with the exposure to AWS and then the retailer side of the things a bit. And you see how that could come into things. I think that they're going to eat Shein's lunch and Temu. I think they are. And I think they probably should because Temu, very affordable, but the brand, right? You can only be... I shouldn't say, but when you're dealing with tariffs, they're coming. Yeah, they are coming. That exemption, the de minimis exemption, that under $800 you don't have to pay tariffs for, that's gone. And it's probably deserved to be gone for some time. If you're tariffing big boxes of goods shipped in, right, which are then distributed, it would make sense that you're not allowing companies like Shein and Temu to obliterate American companies. It's the whole point of tariffs. So there's no way that one's going back, and that is going to help Amazon because that was a threat to them. And they're a little bit different, the business models, but that has large implications, to put it lightly. All right, we talked some PayPal. Yeah, we talked some Super Bowl. We talked some tariffs. We did. Yeah, this one's interesting. So UBS, they're up to Basil III. Yeah. UBS said it managed to offset the effect of tougher rules on its trading operations, which Switzerland had introduced. My best friend works for UBS. I haven't talked to him about this yet. He's over there in Switzerland, enjoying the good life. He's got with 2 beautiful children. Implementing the so-called fundamental review of its trading book part of the Basel III regulations inflated the lender's risk-weighted assets by $9 billion, UBS on Tuesday. It almost completely neutralized that effect with a reduction in operational risk and credit risk. UBS had $500 billion in risk-weighted assets at the start of the year. Our investment bank will be the only major player in the U.S. and Europe implementing final Basel III regulations, and in particular, FRTB, that's the CFO. Despite the additional cost of capital, the investment bank is committed to its profitability goal and a pledge to account for no more than 25% of the wider company's risk-weighted assets. And they face a higher bar in the markets business after they implemented the so-called fundamental review of the trading book this year, despite the fact that it does not yet apply in several other major jurisdictions. I know I'm just reading it, but it's important when you look at Switzerland. They only got one bank now, so they better make sure that they're capitalized, man. Yeah, BNP Paribas said on Tuesday that the new system cuts its key capital ratio by about 0.5 percentage point, while the FRTB would shave off about 30 basis points more. This is what UBS already did. If you're looking for stability, man, in a bank, worth noting and worth pointing out, in my opinion. What else we got going on in this market? This one was interesting. SiriusXM, Mr. Buffett spending a little bit of capital. Yeah. Over 35% is what he has in that company. They purchased 2.3 million shares for about $54 million. Yeah, that's Siri, right? Yeah. And I'm a customer of this one. They're up by 1%. Longer term, how about that chart, right? Careful of growth equities, folks. Internet radio is going to take over the world. Do you remember that? Internet radio is going to take over the world. I half kid. $700. You kidding me? Right? What are we valued at right now? What did that put them at that time? Where's my valuation? Excuse me. There it is. $8.2 billion. Were they a $250 billion company at one point? Probably back then. My goodness. Nonetheless, we go back to a shorter term take from $79.50 to $24. So he's a buyer of these prices. Keep that on your radar, man. And what I will say is it used to be remarkable. So SiriusXM, they put them in the cars, of course, right? You get a lease, it's in the car. You buy a car, you get it free for 6 months or a year. It's a great way to just roll you in where you get used to it, you subscribe. That's how I got sucked into it originally, okay? What was always interesting, though, is that their payment plans were inordinately expensive. $35 a month, something like that, right? So what would happen is that you'd get some kind of promotional rate, you'd roll to $35 a month, and then you'd have to call and cancel, and then they'd say, well, we can put you on a promotional rate again where you'll pay only $12 a month, $8 a month, something like that, right? And they fast forward. And just when I renewed about 6 months ago, they finally changed that. And they finally said, we can put you on this plan that's like $12 a month, and that's what it stays on. And so there was a shift there that they're making. I think they realized, yeah, it was a stupid amount of money, for lack of a better term. Never would I ever pay $35 for radio, okay? Especially when I subscribe to Bloomberg anyway. A lot of what I listen to is Bloomberg radio on there. Many great channels. I like some many music channels on there. I do like them. But I already get Bloomberg. I could listen to that. Not worth $500 a year for internet radio, right? If I'm trying to save $5 a month on Netflix, like I've talked about, $10 a month on Netflix, not trying, but it's just not worth it. They've changed that business model, and maybe Buffett at this valuation likes what he sees. So keep that one. Always interesting to see what Mr. Buffett's doing. Market's positive. NASDAQ 100 up 99. We're talking equities when we come back. Stay tuned, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. And yeah, they're talking about in the den, man. You know, these single stock ETFs, this one is Direxion, PLTU. If you like Palantir, then you're going to love a double Palantir, right? For those looking for volatility. Now, this is a Direxion product. They are a sponsor, folks, but we believe in their business, man. They got some great products, and it is remarkable. If you're looking for exposure, I mean, look at this. Right now, you're getting a move that's remarkable in the underlying, okay? You only had a $10 move priced in, and you're up in either direction. So you could have bought an at-the-money put or call for about $5 yesterday because you had a $10 move priced in either direction, and you're up by $20 right now, double the move. But yeah, it is remarkable, man. You don't need to turn to options to make 50% overnight. Now, man, you know, if you're buying this one and you have a $10 move priced in either direction, okay, and you're buying double the exposure, you better be able to handle some losses if you're looking for a 50% move overnight. And remember, these are daily investment vehicles, okay? When you're multiplying the volatility on a daily basis, and I'm going to do a webinar for Direxion coming up in the next couple months where I just talk about some of the underlying basics that we're all not familiar with. And as they become more available and more prominent in the market, understanding why they're daily investment vehicles and how the long-term results do not always match the underlying because they're calibrated with a daily investment vehicle that goes in there. But boy, you better believe it. So don't just think you can hold these on a longer term basis because your premise could be right, but on a longer term basis, they do not deliver the same results as they're delivering on a daily basis for the underlying that they're set to mimic. And it's pretty cool when you look at the underlying, why that makes sense, understanding it, especially if you're trading it. But if you're trading it today, you're up by 48.5% on the Direxion daily Palantir Bull 2 timeshares PLTU. Yeah, pretty remarkable. All right, S&P's up by 5, NASDAQ holding on well. We check out Google numbers ahead of their numbers tonight. Google up by 1.3% to 205 right now. We check back in on Amazon as the market lifts, up about 0.5%. Apple shares, quite the pullback from their high on Friday. We're basically flat right now for Apple shares. You check in on Tesla, up by 1% right now. NVIDIA shares up by 1.7%, back to 118. It is remarkable, right, that they lose $1 trillion in value. And I keep harping on it, okay? And listen, that was value that just got created in the last few months, okay? So that's what makes it something that you can handle when don't count your chickens before those eggs hatch, whatever the phrase goes. But yeah, if you just take where you were, 153.13 the high, and you look at where we were, even pre-market at 111.51, That's a loss of $41.62 in share price. Okay. And I'm cherry picking here in terms of cherry picking highs, cherry picking lows, but it's real money that people had in their accounts at some point. Okay. And then, so you got $41 per share got taken out of people's accounts from the high to the low, 153 to 111, and you multiply that times 24.9 billion. What is it? What are we outstanding? I think it's 24.49 billion. About 24.5, but I like to do it exactly on this one because it's just so remarkable to take any type of ballparking out of it. There it is. It's a loss of $1.02 trillion, folks. $1.02 trillion. Nobody's talked about that. Have you heard that they lost $1 trillion in market cap? And listen, it's not, it's sensational, it's anecdotal, but you better believe that it's illustrative of the volatility in play. You better have your spikes up on your back. We got NVIDIA shares back to where we were last May, and shareholders just lost. Yeah, I can get it on a 20-day. $1 trillion in the last 20 days in NVIDIA. Now, they made back $7 of that share price to 118, 7 times to 24. They made back $175 billion. They lost $1 trillion. They made back $175. Volatility is going to be here, folks. We have AI volatility, and we have tariff volatility. So I keep, if there's one thing I can stress, cut your losses. Try and let the profits run. Always keep a stop. You can set a trailing stop. But we're going to have some moves in this market, man. And, we're only 13 minutes into the day today. We could have some moves today because all we did was fill that gap. And we're only about 60 points from where that gap is filled, where we turned last night at 6 o'clock on the futures. So we're at some critical levels right now. And we got China looming, right? We have negotiations with China. We could get a headline there. It could be a good one. It could be a bad one. You want to think about the game theory of this to a certain degree, because I say game theory, but negotiations are a game theory scenario, okay? And it would be interesting if Trump befriended Mexico and Canada and then slapped China down. Don't think that's coming, but I found myself thinking that this morning, right? Not a coincidence that Mexico and Canada, different partners, to put it lightly. So we're going to get some headlines, and we got the economy in the backdrop. So you got AI, you got jobs on Friday, you got the Fed dealing with inflation that's not on its way back to 2% anymore. They've indicated that the market is actually tightening the job market. There's no looseness there anymore. It's tightening. So we got no cuts coming down the line right now. We have tariffs on a 30-day rolling basis, and we got the VIX at a 17 handle at 1789, slightly above the historical average of about a 1650. And yeah, we've seen some spikes since about July. We keep those spikes up on the back. All right, what else we got out here? Yeah, Pepsi out with their numbers. A little bit lower today. Pepsi. Look at that chart, right? From 180 to 140 recently. You're down another 2% for Pepsi shares this morning. And Pepsi, net sales dropping slightly. People are buying less chips, especially in North America. And they're doing it less at the convenience store. Let me pull over the headline here. And it would make sense, right? If you're feeling the strain, you're feeling higher prices. We all know the scenario, right? Prices are high enough. You walk in a convenience store, it feels like you're paying inordinate prices. I often talk about the checkout aisle at Publix. Folks, checkout aisle at Publix, a 20-ounce bottle of soda, which you shouldn't be buying anyway because sugar is not good for you. And what happens there? $2.69, I think, is the price for a 20-ounce bottle of soda. $2.69. Man, bonkers. Remember, it used to be $1. Seems like a 20-ounce bottle of soda should be $1. And it should, except they get you at the checkout. But I couldn't believe $2.69. Who's paying $2.69 at Publix? Go buy yourself a 2-liter bottle. In 2024, the salty and savory snack categories underperformed broader packaged goods, following multiple years in which these had outperformed. Demand was weaker in the company's home market, North America. Shoppers in the U.S. have grown more cautious, snacking less, and making fewer purchases at convenience stores. So yeah, Pepsi pulling back a little bit of a lift, but longer term, they got some woes here. Follow that chart, man. You break below the lows of 2023. That's a weekly. You go back to a monthly. This thing's been on quite a rocket ship to higher price, and this is a real dramatic pullback we're getting here, man. Boy, you want to see something? Oh,
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Spotify. They make money for the first time. Been quite an existence for them. You see how long the runway, the ramp is sometimes to profitability. And look at this chart, man. Up another 10.5% today. That's a weekly. Let's put it on a monthly. Look at this thing, man. Now, you look at a chart like this, that is a lot of optimism built into this equity, folks, from $80 to $607 at the beginning of 2022. But yeah, they got numbers. They're higher today by double digits, up by 11%. We'll call it up $58 to $607. Talking about Netflix in the YouTube Tiger's Den. Yeah, all-time highs, 1,006. You were just trading at 1,000 when I pulled it up. Netflix shares surge higher by $20 on the open to over 1,000. We're trading at $999 for Netflix. We jump around to some of the other streamers. Warner Brothers, they catch a little bit of a lift on the open as well, up by about 0.5% right now. You jump over to Paramount, up by 1.2% right now. You jump over to Disney shares, up by 0.25% right now. But Netflix, the king, there it is, 1,000, up by 2.2%. Yeah, so as I mentioned, you get 25% of the market capitalization reporting their earnings this week. 25%, not of the companies, of the market cap. Two of the biggest out there, Google and Amazon. Google, after the close tonight, you jump over to the Analyze tab, about a $12 move in either direction, the market pricing in. You jump over to Amazon, and you're looking at about a $14 move on Thursday, this is. Okay, Amazon's Thursday, Google's tonight. Both of those equities trading higher. Amazon's almost pushing all-time highs too, right? Yeah, 241. We're trading at 239 right now for Amazon. We jump back to Apple, the big dog. Apple shares up by 0.25%. But check out Apple. Talk about well off the highs at 60 towards the end of last year. This market, relentlessly strong. NASDAQ 100, we're up by 0.7%. S&P's up by 12. Stay tuned, folks. We have a replay coming up this hour. I'm going to come back for the 10 o'clock update. We got live programming after that. Have a great Tuesday, everybody. I appreciate you starting your trading day off right here at TFNN. And we'll see you tomorrow at 9. Have a great one, folks.